Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 21st of March. Chinese equities rally on looser lending. The Shanghai Composite Index closed up 2.4% on Monday after policymakers announced looser standards on margin lending, allowing easier and cheaper access to investors wishing to borrow money in order to buy shares. The move came by a state-backed lending firm which declared that it will cut interest rates on margin loans to 3% from 4.8% previously. The measures may calm a bit the equity markets and boost somewhat investors' confidence, as the government appears committed to support a stock market that has had a troublesome start to the year. Nevertheless, given that other Asian stock markets have remained subdued through the session, we would stay cautious on further advances, as this appears to have had little effect on overall risk sentiment so far. Today, the Eurozone preliminary consumer confidence for March is coming out, and expectations are for the figure to have declined again, but by less than previously. The bloc's current account balance for January is also due to be released, but no forecast is available. From the US, we get existing home sales for February, and expectations are for a decline. We have three speakers on today's agenda: ECB Vice President Vitor Constancio, Richmond Fed President Jeffrey Lockhart, and Atlanta Fed President Dennis Lockhart. As for the rest of the week, on Tuesday we get the preliminary manufacturing and service sector PMIs for March from several European countries and the Eurozone as a whole. All the indices have been in a downtrend lately, a factor that may have contributed to the need for the aggressive easing package introduced by the ECB last week. Further weakness in the bloc's PMIs could give evidence that the economic recovery in the euro area is petering out. From Germany, we get both the major sentiment surveys for March, Ifo and the ZEW. The forecast is for both surveys to show an improvement in their expectation indices, but a slight deterioration in their current condition indices. We believe that investors may focus primarily on the expectations gauges, where a possible improvement could add to the euro's recent gains. In the UK, the CPI for February is due to be released, and expectations are for the headline and core rates to have remained unchanged. In January, the tick-up in the headline CPI was considered temporary, with the main contributors being volatile items such as fuel and food. As a result, an unchanged print this month may imply that the rise in the headline rate has been sustained and could cause the pound to add to its recent gains. On Wednesday, we have no major events or indicators on the agenda. On Thursday, the UK retail sales for February are expected to have fallen on a monthly basis after surging by the most in 2 years in January. And decline following an astonishing surge appears more than normal to us, and we don't believe that it will have a significant impact on sterling. From the US, we get durable goods orders for February. Both the headline and core figures are forecast to have fallen following sharp rises during January. The headline rate is expected to have fallen notably more than the core, which exclude transportation, which could bring the greenback under renewed selling pressure, at least at the release. Finally, on Friday, during the Asian morning, we get Japan's CPI for February. No forecast is currently available for the headline figure, while the core rate is expected to have risen marginally to 0.1% year-over-year from 0% year-over-year previously. In its latest policy meeting statement, the Bank of Japan noted that the yearly change in the CPI is likely to remain around 0% for the time being. Therefore, we expect that even if the inflation rate deviates somewhat in coming months, it is likely to remain reasonably close to 0%. Markets will remain closed in most European countries and the US in celebration of Good Friday. However, we get the final estimate of the US GDP for the fourth quarter. The final print is expected to confirm the second estimate. We don't expect any major reaction from the dollar as we see this data as outdated. We prefer to wait for the first estimate on the first quarter 2016 for signs on whether the volatile turn of the year has left its marks on the US economy. The third estimate of the core personal consumption index for the fourth quarter is coming out as well. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.